This is Joe Rabil with Rabil Stock Research. So I'm going to start the show with a lesson on moving averages and a single simple moving average and how I use this as a specific strategy. Something that I think if you look at it in multiple time frames, you can zero in on what time frame you should be trading and whether it has the potential to be a bigger trend or not. All right, so we're going to go through that and then we'll look at the market and we'll go through the symbol requests that came through this week. All right, let's go ahead and get going. All right, so I've got my 4 time frames up, and let's just, anyone new, make sure they understand what we're looking at. We got a monthly in the bottom left, weekly in the bottom right, daily in the upper right, and then an hourly in the upper left. And all I've got on these charts is a price action with the candlesticks with the 18 simple moving average, and then just the volume at the bottom. All right, now what I wanted to show here, and in fact, I want to zero in on this weekly chart for a second. We've got a specific thing we want to be looking for when we're looking at moving averages. And so we've got, let me just show you what a moving average can look like over time. All right. And what we're trying to find is a period where we've got good slope, all right, and price is respecting the line. All right. Now, if price is respecting the line, this is going to have slope to it. If it's not, then there's not going to be any slope. But what we want to avoid, and I want you to go back and look at your losing trades, and I'll be willing to bet that you're playing. There might be a little bit of slope, but I'll be willing to bet your losing trades fall into somewhere into this camp where you've got a flat to maybe slightly rising moving average with no respect to the line. All right. Now this is on the higher time frame. This is I call it the trend time frame because this line is defining the trend. If it's rising, we can take a trade. We can take a pullback trade to that line. All right. But we need some respect for the line. All right. And we want to make sure on the higher time frame we don't have any major resistance in place. All right. Now, if you notice what happens once the trend gets going and we get a successful pullback to the 18, we can continue to do that. Now, most of the time, we're only looking at the first couple as the highest probability, but there are times when you have a sequential wave pattern where you're just not going crazy to the upside. There's no spike move or anything like that. It's just moving up in an orderly fashion and never getting too far away from the 18 on any time frame. Now, before I start getting questions in the comment area, you can use a 20 MA if you prefer. The difference is not all that great. I use the 18 simply because it offers a slightly faster slope shift. I like the shift in the slope a little bit quicker. That's for my taste, but it's really not a big deal. If I put the 20 up, you would hardly see the difference between the two. All right. Now, that's the key is just understanding that once we have slope in our favor, and I'm not showing the momentum indicators. We want to have momentum confirming this, but this is where the starting point is. All right. We're looking for slope. If we have a flat moving average and you're trying to trade, you're going to have more stop outs. You're going to have more losing trades. All right. Look for periods where the moving average is rising. Now, if I take this back and we look at the multiple time frames, you can see that this is the only time frame for basically a pretty good period through the end of 23 all the way till the end of 24. Basically a year straight where we had one moving average where we were respecting that line, all right? I mean, all the others, this was jetting away from the 18 on the monthly. This kept on every single time. It was overrunning the 18. It kept on coming back. Now, that can be used as a way of entering back in when it turns back up and gets back above the moving average on the lower time frame can be a trigger to get you back in on the higher time frame. But what I want to point out is on the higher time frame, we are looking for pullbacks to a rising moving average. Now, it can be the same on declining. We can look for decline. I'm going to show you an example of that in a second. In fact, let's go ahead and switch this next example. So I wanted to show how you see this extreme networks, you see this drop, and then we fail at the line, and then we respect it. Now, on the decline phase, we get a little bit more violent move to the downside, and then we get failure. But what's interesting to me is you see how this doesn't have a real climax. Like on the way up here, we had a surging market phase. So this is the difference. Sequential wave is where we just move up and keep coming back to the 18 more quickly. All right. Surging is where you just go straight up and you never really test the 18. You don't keep coming back. You just surge to the upside. You see the difference? This is sequential wave and this is a surging market. All right. We want to trade sequential waves. These are the ones where you have the potential where you can keep playing these moves until it gets out of hand and kind of goes crazy to the upside or the downside, depending on how it plays out. So this is a surging market phase. But if you notice the way this dropped, it never really surged or anything. It never got crazy stretched away from the moving average. So why did this return? Why did this start to turn here? Well, if we go to the higher time frame, it starts to make a lot more sense. You see how we came into this big support area on the higher time frame. So if we're looking at this higher time frame, it gives us a really good sense of where we should be looking for reversals here, whether there's climax or not. All right, now if you notice on the way up, we moved up, we moved up, we moved up. This wasn't too bad of a climax. I mean, it did get stretched away a little bit more than the prior situation, but notice how this is starting to fail here and turn to the downside. Why is that? Well, if we go to the higher time frame, we can see we ran into resistance from that higher time frame. This is where it gapped down from. We came into a declining 18-month line and all this price resistance. So this is sort of a window. We have a window from 10 to 20 on this time frame where there's not a significant amount of resistance. Now, I like to use the moving average as that window, meaning if I see a turn on the lower time frame and I know what my target is basically coming up into the resistance on the next time frame. So that's kind of how I can buy pullbacks on this time frame until I get too close to this time frame where the trade doesn't make sense. Okay, so if I want to play counter trend to the higher time frame, the upper time frame, I can do that. I can use this as my main time frame. I can use this to help with my entries, and I can use this for my targets. So by using this strategy, you can get just keeping it real simple. Just using one moving average can give you a really good sense. You've got to have a rising line or a declining line to be able to play. Let's just take a quick look at Morgan Stanley because again, we want to use the higher time frame to show us. You can see here, we started to show respect of the line here, but we were still inside this range at this point. Respect it again. Now, this is a point I do want to make. This line is still rising. Yes, we broke it by a little bit. I don't want you thinking this like a pane of glass, all right? If it goes through it a little bit, it doesn't shatter it, all right? It's more like a mattress or something like that, where it has a little give to it, all right? It's got some spring, but it's not necessarily going, if it goes down through it a little bit, it doesn't mean that it's breaking it. So that's a key thing you got to keep in mind about a moving average. As long as this line is rising, it's still basically in force. But what I think is important is if you look at this 100 mark, this 100 mark is where we're breaking and turning this moving average to the upside. We're breaking above resistance. And this is where we start to get some respect of this line to the upside. All right. And we do get a little bit of a surging move here, and then we pull back. I do expect when we have strength to the upside, we can respect this line. Now, I'm sort of expecting this to come back and be a little bit more complex consolidation pattern. I would not be surprised if we end up breaking this line sometime before too long, simply because this was such a surging move to the upside, and we've already had a pretty good trending move prior to that. All right, last example is BKR. We can see where we're holding, but look at this 40 mark. The 40 mark is where we're breaking out on the higher time frame. So if you can look at these pullbacks on the lower time frame, in this case it's a lower time frame. So I want you to think 3 time frames. Upper time frame here, and where are we breaking out of key levels or pulling back to key levels? This is a pullback to the 18 that's rising, but it's right at the breakout point. And then we can use the smaller time frame to help us with our entry. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on the services page right now. You can see at the top, I've got the advanced trend and momentum courses individually priced for lifetime access. Plus you could buy them as a bundle at a discount. And then also the individual package has about 2 to 3 reports each week, plus a special video commentary each week for that package. Also, if you're new to this approach and you want to just learn more about it, you can start with the book I'm offering at a discount right now. My comments are for educational purposes only. Do your own research before making any investments. All right, I want to start out with the QQQ, and I want to show something specific related to the ADX, all right? Because, well, first of all, we can see that we are continuing to, we're pulling back to a rising 18-week. Now, if you notice, we did have a breach of this line a couple times. I mean, pretty deep pullbacks, okay? From this point on basically starting in 2024. But if you notice, that line never turned down. It's been rising, all right? This was about as close as it came where it started to flatten out here. Other than that, it's pretty much been rising, especially through this period here. So we keep respecting this line. However, if you notice, we made a breakout move starting late last year, okay? And look at what's going on with the DI and the ADX, all right? So green DI is struggling to make any real progress. It actually has done a little bit better than the S&P. It did make a slightly higher high here. But if you notice, ADX was at such a low level that even this little DI move only caused this to move up, just a little bit here. I mean, it's still in the mid-teens. So you've got what's supposed to be a breakout pattern breaking out again, and you can't even get this ADX out of the teens. We want it above 25, and it's still around 16. So that's concerning. Now, I do look at this MACD and think, it's not really giving me a whole lot of information. It's got 2 different signals going. It's got a reverse divergence now. This looks like it's making a slightly lower low. While this is making a higher low, well, this is also below, right? But I need to see a break of the 18-week line to confirm what's taking place on an ADX basis. I mean, this has been going on for quite some time where the ADX has been low, all right? So we need a clean break. We need a violent break, and one that causes now, I believe if we break it now, because this has been balled up in here for a while, I think this line will start to roll over, and I believe the same thing is true of the S&P. If you want a little bit more, a deeper update of the S&P analysis, I do that Friday mornings on my YouTube channel. All right, let's look at this IWM. And let me go back to the grid. In this ACP, Stockcharts ACP program, I've got the monthly in the bottom left, weekly bottom right, daily in the upper right, and then I've got a different chart. It's a weekly chart, but if you notice, I've got the price structure outlined using their zigzag indicator, which is a great indicator. It uses average true range to determine the reversal points, so it works very well. I've also got the relative strength line and a 30-period moving average of the relative strength, and then I've got 2 RSIs overlaid on top of one another. The 20 I use in red is for the trend. If it's above 50, the trend is up typically, and RSI 5 for an overbought, oversold oscillator. So I want to just point this out on the Russell because I wanted to show this. We're still watching for, this is having a good day. The NASDAQ 100 is down almost 0.5%, and this one is up over 0.5%. But we need this to get through this resistance area up here. I actually want to see a reversal of RS. I want the RS to show a 1, 2, 3 reversal. We have broken the downtrend line. We're testing it, but we haven't come through this peak up here to confirm the reversal. If we get that with the improvement in the, and really the RSI 20 has been holding. If you notice, that red line has been holding above 50 for some time, and we keep trending to the upside. But we're not trending to the upside faster than the S&P, and that's kind of what I want to see. I want to see an improvement from that standpoint. I do believe the 230, low 230 area is a key resistance area that we got to watch on the IWM. All right, so I got a request on this GDX. I've been talking about the gold action for quite some time, the GLD, but just looking at what's taking place in this ETF, look at this little trend line break here. You see this trend line here? I'm having problems with my trend line. Let me see if I can get it to work. There we go. So we break the trend line, and now we come back and test the trend line. We test, look at how these moving averages are now rising underneath. Do you see how that's playing out? We've got a rising 18 with a rising 40 underneath. We have a pinch play and just signs of improvement. Now, if you notice, and the question came in, the short-term RS improvement. So let me switch this to a daily chart. And we can look at the RS, and you see how the RS is turning here. You see how we've reversed on a short-term basis. But if we go to the weekly, we haven't quite done that yet. That is the one that I believe will give us a really strong indication that this area is going to really kick into gear. All right, because it's really just a big basing pattern it's trying to emerge from. If we can get the relative strength to break this downtrend line, then we've got a bigger move. Now, if you go by the daily signal, that doesn't prevent you from playing a shorter term play, breaking this downtrend line, MACD coming up, improvement in DI. If you wanted to play it for a move back up to the highs, you can do that using the shorter term relative strength. But I'm waiting for the bigger one to really kick into gear. And I don't know that you really need to wait, because what this is doing, I actually think there's a lot of gold stocks that are already broken out, already trending. In fact, most of them are overbought. From my list, I have a bunch of stocks on my list that I send out on Wednesdays to subscribers, and they've made big runs, and they actually need to pull back now. So I like the look of this. I would have no problem being a buyer of this from just looking at it from an overall standpoint, even though the relative strength isn't quite there yet. Okay, looking at Kroger, I think we missed the last opportunity. All right, so look at the pullback to the rising 18, right? So look, I mean, here's a pullback to the rising 18, right? And then these weren't really all that stable. I don't know that I like those as much, but here's a perfect example of a breakout of a big base, and then we get the pullback to the rising 18 post breakout, and then we get our trigger coming back up. Now, based on the way I do the triggers, I probably would still be looking for a pullback in this, just based on the fact that there was some overrun in the MACD, and it didn't really set up a little higher low, which I prefer. So you could still be looking for some kind of a little pullback or something like that. But really, the true opportunity is when we're getting a little bit closer, we're pulling back towards the 18-week. So very strong pattern emerging out of a big base. I just like to see a little bit of a pullback first. Okay, so XYZ, this block. So yeah, I mean, when I look at this, especially on the weekly chart, I think we've been in a down. So we broke the down. Let's see. Let's just look at this. So we break the downtrend. All right, and then we make a move to the upside, and now we're essentially emerging out of this base. All right, now this is these are all even though this overran, I would view this as a test, almost like the 2, right? But it hasn't really emerged until recently. It started to show real signs of reversal. Now, that doesn't prevent you from playing this down here, because you had your own little, you could have gotten involved in this with a low ADX and improving little MACD crossover, right? And you could have played this to the upside. But in terms of the big trend, we're looking for this to get back above this area here and really emerge. So if I go back and look at the daily chart, just love to see this come back above these 2 prior peaks here. If we get that, I think we've got the start of something probably pretty important. And my reasoning is, again, because we're emerging through this kind of key area. Now, 100 is a big number. So we could come back up through these highs and still stub our head on this 100 level. Want to see, on a bigger picture basis, to get confirmation, we really want to see 100 exceeded. But the makings of a pretty big pattern that have developed and have gone a long time working sideways are there. And we are getting our first RSI signal where the RSI 5 is below 50 and the RSI 20 is holding above while we're pivoting there. So those are all good signs. Let's look at this TCEHY. Look at this reversal taking place on the monthly chart. This was a good find, the guy who brought this up. So kind of interesting the way this is developing. Now, I do think, if you think about this, what did I say in the lesson? We want this moving average to be rising, don't we? I mean, or we'd like to see these come together and maybe set up a little bit better. I know we've got an ABC decline, but we're still sitting at an 18. I would like to see something like that develop where we make a higher low now. I think just based on the way this has developed, I think that would be the optimum. Now, it's a monthly, weekly, so this is actually the lower time frame, but we don't have a truly rising 18-month yet. It's close. It's getting there. But like to see a little bit of a push, pull back, or just pull back from here and then turn up to the upside. But definitely a good stock to keep an eye on. One of the things I did want to mention, now this actually wasn't a request, but I did want to bring this up. This is a stock, and I want to show this because I want to show you the power of a low ADX condition that goes on for a very long time. Now, if you notice, the ADX dropped down below in 2016, and it stayed below until early 2024. One of the key things, though, was these last 3-4 years, all three lines stayed below the 25 level. So that tells me that not only do we have a low ADX condition, we also have a low volatility condition where we're forming a really tight compression pattern. These are the absolute best setups that we can find, all right? When we get those, we want to be looking to play the emergence out of this trend or the pullbacks that follow after. All right. And this could go on for years. If you go back and look at some of the big stocks like Microsoft and stuff like that, they had a low ADX condition probably 10, 12 years ago, and they've been going up forever. Right. So or since that time. So something you definitely want to keep an eye on. Thanks for watching today. If you have any stock requests, you can send them to stocktalk@stockcharts.com or just put them in the comment area below. Also, if you want to learn more about some of these techniques, you can go to my YouTube channel called Invest Like a Pro. Have a great week, and we'll see you next time.